Welcome back to Breaking Down Personal Finance, where we make money make sense. Ever wonder why some people swear by credit cards while others only trust debit cards? Today, we're breaking down what each one really does, how they affect your money, and which situations call for which card. Let's start with why this even matters. Debit and credit cards might look the same. They're small plastic rectangles that let you pay without cash, but they pull money from totally different places. That difference can mean avoiding debt or accidentally building it. And the way you use them can shape your financial reputation for years. Picture this. You're at a coffee shop, you tap your card, and boom, latte in hand. Easy, right? But what just happened behind the scenes depends on whether that was a debit or a credit card. With a debit card, the money for that latte leaves your checking account almost instantly. With a credit card, the bank covers it for now, and you promise to pay them back later. That's the core difference. Debit equals your own money now. Credit equals borrowed money you'll repay later. Here's where people get tripped up. A debit card feels safer because you can only spend what you have. No surprise bills at the end of the month. But credit cards come with perks like rewards, fraud protection, and the all-important credit score building. So which one's better? The truth is, they're tools, each with a job. And just like you wouldn't use a hammer to screw in a light bulb, you need to know when to swipe which card. Let's walk through debit cards first. Imagine your checking account as a digital wallet. Your debit card is the key that opens it. When you buy something, the money flows right out of that account. It's like paying with cash, just faster. That means you can't spend more than what's in your account, unless your bank allows overdrafts. And those overdrafts can lead to annoying fees. So, in a way, a debit card keeps you grounded. It's perfect for people learning to manage money, or for anyone trying to avoid debt. But there's a hidden twist. Debit cards don't usually help you build credit history. That's because you're not borrowing anything. There's no record of you repaying debt responsibly. And in the world of personal finance, your credit history is like your financial report card. Lenders, landlords, and sometimes even employers look at it to judge how trustworthy you are with money. So while a debit card keeps you safe from debt, it also keeps you invisible to credit systems. Now let's flip to credit cards. Think of them as short-term loans wrapped in plastic. When you swipe, the credit card company pays the store for you, and you owe them later. If you pay off the full balance by the due date, you don't pay any interest at all. If you don't, interest kicks in, and it's usually high. This is where many people get stuck. They see the minimum payment line on their statement. They think they're fine paying just that, and then they end up carrying a balance month to month. The result? Debt that quietly snowballs. Here's the twist that surprises most beginners. Using a credit card responsibly can actually make you look good financially. Every on-time payment adds points to your credit score. Every time you keep your balance low compared to your limit, you show lenders you're in control. Over time, that score can open doors. Better car loan rates, easier apartment approvals, even cheaper insurance in some states. So while credit cards can be dangerous if misused, they can also be your ticket to financial flexibility. Let's pause for a second. Imagine two friends, Alex and Jordan. Alex uses only a debit card. Jordan uses a credit card, but pays the full balance each month. After a year, Alex has zero debt and zero credit history. Jordan also has zero debt, but now has a healthy credit score. Both are responsible, but Jordan's financial resume looks stronger. That's the quiet power of credit. Now, you might be wondering this. If credit cards are so useful, why doesn't everyone use them? Because temptation is real. It's easy to overspend when it doesn't feel like your money is disappearing immediately. That's why the credit card industry can be both helpful and harmful. It rewards discipline, but it punishes impulse. And those interest rates are no joke. Many cards charge over 20% annually on unpaid balances. That means a $500 balance could quietly grow if you only make minimum payments. Here's another place people get confused. Fraud protection. Both debit and credit cards protect you if someone steals your card info, but not equally. With a debit card, the money leaves your account right away. Even if your bank refunds it after investigating, it might take days or weeks. During that time, your rent money or grocery budget might be missing. With a credit card, the charges are on the bank's dime, not yours, until things get sorted out. That extra cushion can be a huge stress reliever. So when should you use each one? Debit cards are great for everyday spending, when you want to stay strictly within budget. Groceries, gas, small purchases. They're also useful for people who are rebuilding credit or want to avoid temptation. Credit cards shine for larger purchases, online shopping, travel, or anything that benefits from fraud protection or rewards. Some cards even offer cashback or travel points for money you were going to spend anyway. Here's a metaphor to lock it in. Think of your debit card as your trusty bicycle, steady, safe, great for short trips. Your credit card is more like a sports car, powerful, fast, but dangerous if you lose control. Both can get you where you need to go, as long as you respect their limits. Now let's talk about the hidden costs. With debit cards, the main risk is overdraft fees. Some banks charge up to $35 each time you spend more than you have. You can avoid that by turning off overdraft protection or keeping a small buffer in your account. With credit cards, the hidden cost is interest. If you carry a balance, that free money suddenly becomes expensive. The credit card company makes billions off people who don't pay in full each month. So the golden rule is simple. Never charge more than you can pay off when the bill arrives. Here's a common beginner mistake: thinking credit cards are bad just because they can cause debt. In reality, they're neutral. It's how you use them that matters. If you treat your credit card like a debit card, only spending what you already have, you'll get all the perks without the pain. That's how financially savvy people play the game. Another question that pops up a lot is about credit limits. When you get your first credit card, the limit might be low, maybe a few $100s. Over time, as you show responsible use, the company might raise it. That's a good thing, because it lowers your credit utilization, basically the percentage of your limit you're using. Lower utilization helps your credit score. But again, it's not an invitation to spend more. It's a sign of trust. Here's a quick story to pull it together. Imagine Emily, who just turned 18 and got her first debit card with her checking account. She used it for her allowance and part-time job money. She learns how to track her balance. After a year, she's comfortable managing her spending. Then she opens a beginner credit card. She buys only what she can afford and pays it off in full every month. By the time she's 21, she has a solid credit score, no debt, and confidence with both tools. That's the ideal path. Start safe, then level up. So what happens if you mess up? Say you overspend on a credit card and can't pay it off right away. The first step is to stop using that card. Make at least the minimum payments. Then set up a plan to pay down the balance as quickly as possible. Call your issuer and ask for a lower interest rate. They sometimes say yes if you've been a good customer. And most importantly, don't panic. Mistakes happen. What matters is catching them early and learning from them. Debit and credit cards don't have to be enemies. Think of them as teammates. One keeps you disciplined. The other helps you build your financial reputation. Together, they give you flexibility and control, if you use them wisely. In short, debit cards let you spend your own money and stay grounded in your budget. Credit cards let you borrow temporarily, build credit, and enjoy perks. But only if you respect the responsibility that comes with them. The real secret isn't choosing one over the other. It's understanding when to use each and how to make them work for you, not against you. If this video helped clear up the mystery between debit and credit cards, give it a like and hit subscribe so you don't miss our next breakdown. We're building a community of people who want to understand money without the boring jargon or judgment. Tell us in the comments what money topic you want us to tackle next. And remember, don't take financial advice from someone drawing doodles on YouTube. Learn here, research more, and then make the call yourself. Thanks for watching Breaking Down Personal Finance, where we make money make sense. See you next time.